Hello, First Teams, and welcome to the First Fundraising Toolkit, Section 6 webinar focused on the topic of 501c3 pros, cons, and best practices. My name is Renee Becker, and I am the First Fundraising Toolkit coordinator. And joining me for this webinar is Meredith Novak, the First Regional Director of Arkansas and one of the main mentors for FRC Team 16. Meredith, thank you for joining me today.
Well, Renee, thank you for having me. I really appreciate the opportunity of getting to share things that I have learned the hard way with the other first teams, so maybe they won't have to learn them the hard way.
Absolutely. So the grant for the First Fundraising Toolkit is from the Argosy Foundation, and the focus for the toolkit was to provide teams with materials to fundraise, help them develop local community relationships, highlight successful fundraising methods, and then overall increase the sustainability of first teams and their relationships with their communities. The goal of this specific section is to look at 501c3 pros, cons, and alternatives, and to review tips and best practices for teams. Today, we're going to be going over some 501c3 common questions and be giving teams a few resources that they'll be able to reference. Now, as a note, this webinar is for informational purposes only and should not be construed as legal or tax advice. So, moving along, Meredith, can you give us a little bit information about your background?
Okay, like it says, I've been a volunteer since 2001. I'm a mentor for Team 16, FRC Team 16. I'm also an FTC coach, and I was an FLL coach. I was also the FLL and FTC partners for Arkansas. Fortunately, we have enough people now that somebody else is doing those jobs, which is really great. Since I think about the middle of 2011, I've been the assistant and then regional director for the state of Arkansas. We had our very first regional competition last spring, and we're looking forward to our second Arkansas Regional in 2014. When it says I have a background in nonprofit and tax accounting, I'm not a CPA, I'm not an attorney. I have a degree in economics. When I moved to a small town, there's not really many jobs for economists, so I worked part-time because I had kids in a tax office, and I really was interested in learning about nonprofits and doing tax returns for nonprofits, mainly because nobody else wanted to do them because they're very difficult. So it was just a challenge to me, and so I tried to learn everything I could about nonprofit accounting. And it's a very difficult field, but like you said, I'm not an accountant, I'm not a lawyer. I just am really good at following instructions. And the picture there is of me and my husband John, and everybody knows John. He's the famous one of the relationship. But John is not an accountant or an attorney either. He's just a really great engineer and first mentor.
That's excellent. Lots of people know John, but I think lots of people know you too, Meredith. So let's move into the presentation. Starting with just the basic understanding of what a 501c3 nonprofit is. Can you talk a little bit about the difference between what a nonprofit organization would be and a for-profit organization is?
Sure. It's pretty easy to get a corporation, either a for-profit or a nonprofit corporation, and you can incorporate in your state as a nonprofit, but that doesn't necessarily mean you are tax exempt. So that's kind of the initial confusion for people. There are multiple steps in becoming what everybody wants to be, which is a nonprofit corporation that it can accept tax deductible donations, apply for grants, get the benefits of being an actual tax exempt organization. Nonprofit corporation does not mean you're a tax exempt corporation, but it's the first step in becoming that. Incorporating in your state is not really that difficult. You need to go to your state, whatever state you're in. The Secretary of State website has really good information on how to incorporate in your state. And if you're looking to be a tax-exempt educational organization, which is what a first team or an organization that runs first tournaments, my experience was in incorporating Arkansas First Incorporated. It's not the one that runs teams, it's the one that runs the regional here and some of the other tournaments. And you would be what's called a 501c3. It's an IRS section of IRS code. There's other nonprofit corporations, foundations that have different numbers and letters, but 501c3 is what an educational tax exempt organization kind of starts out being through their state. And now, like I said, that's a state corporation. All corporations are formed at the state level. The tax exempt status is a federal designation, and then once you get your federal tax exempt status, then you come back for your state tax exempt status. So you start at your state, You go to the federal, which is the IRS, and you come back to your state. And it's usually kind of a de facto thing once you get your federal. See, I'm already moving into the next slide on tax exempt status. I'm sorry. Anyway, so basically the first step is to go to your state Secretary of State's website and figure out how to incorporate in your state as a 501c3. And that's not a difficult thing to do. Like I said, if you follow the instructions and ask a lot of questions, it's possible to do it, because I did it. And when I formed Arkansas First, I started the process, and I went from getting my 501c3 corporation in Arkansas, filing my Form 1023 with the IRS, getting my tax exempt designation from federal, and then all the way back to state in probably less than 2 months, maybe 2.5 months. So it's not impossible, but it was not fun.
Absolutely. And so this presentation is specifically for the nonprofits that want to qualify for federal income tax exemption, which is under this, the 501c3 of the Internal Revenue Code. And then that means that the nonprofit corporation must be formed for religious, charitable, scientific, literary, and for educational purposes as well. And so that's the area that we're focusing in for this webinar. So let's move along and then take a look at how do you incorporate. And so you started going into that before, but do we want to kind of dive in a little bit more and talk about, forming the corporation, some of the forms teams have to fill out, picking a name and things like that?
Okay, well, like I said, the first thing you do is form your corporation, and there's a link there, statelocalgov.net, which you can get on that website, and it will direct you to your state's Office of Secretary of State, where you would go to find your filing papers. A lot of those state websites also have fill-in forms, sample forms, really good information to help you incorporate. The states want you to incorporate because they get money every time somebody files a corporation, so they're not difficult to get around. It's how they make money on fees, so they are happy for you to incorporate. So the next thing there are various steps to go through, obviously, but one of the most important things is to choose a name. I went through a lot of iterations of what we were going to call Arkansas First, and we ended up with Arkansas First Incorporated. But you need to think about, what is your website going to say? What is all your publicity material going to say? If it's for your team, make sure it's a name that you're going to stick with. And like the Bomb Squad Team 16 here in Mountain Home, we have a nonprofit that runs the team that I used to be on the board of. I'm not anymore because of the Arkansas First expansion, but it's the Science and Technology Group Incorporated. It's not Team 16 or Bomb Squad or anything else, because the mission statement of the organization is to promote science and technology education in Mountain Home area schools. One day they may expand into something else, or you need to really be careful when you choose your name that it accurately describes what your mission is. And that's another thing you have to do when you incorporate, is come up with your mission statement. What do you want to do? What is the point of this? And make sure your name reflects that. One of the notes that I wanted to bring up, when you use First in your name, you have to get the permission from US First, because that's their name, and it's usually only if you're like organizing a district or a regional like we did. Most teams probably are not going to want to go that route. It's just a lot of trouble, and it's probably not going to happen anyway. So that's just kind of a little cautionary thing to not use somebody else's name. Also, when you pick out your name, you have to search the database of corporations in your state, because somebody else may already have your name. I figured that Arkansas First Incorporated would already be taken because a bunch of banks are named First. But if I spelled out Incorporated instead of just being INC dot, it was available. Arkansas First INC dot was not available. So there's little tricks like that you can do. So if you see that your name is taken, you might change something really tiny in it and your name is available. Also make sure your website domain name is available, because you want to make sure that you can brand your corporation across all the platforms of where you'll be doing business. So articles of incorporation, that's your incorporation document. That's the one that as soon as you file that with the Secretary of State, your corporation becomes real. It becomes a thing. Corporations, as long as you file your articles properly, are pretty much always approved by the Secretary of State, so there's not really any, oh, am I going to get to be a corporation? Articles of incorporation, it varies by state. Like I said, the form for that will be on your Secretary of State website. It just defines your organization. It's very defined, different sections, and I'm not going to go into all the sections because it's really boring. But you just basically fill it in and answer some questions, and that goes into your Secretary of State, and it's kind of an automatic thing that you will be incorporated at that point. And you have to have your articles of incorporation in before you can file for what everybody wants, the tax exempt status from the federal government. So that's very important to get that done. And then you have to prepare your bylaws. And bylaws are very important. You can get so many templates on the internet, and the sources I'll have listed at the end, some really good books. I just had a really good textbook that I just did everything it said, page by page. So any of you people out there are really compulsive and like to follow directions, this is a wonderful project for you because it's all written there. It's a very tedious process. And your bylaws are very important because they really give instructions on how your organization runs. For instance, your board of directors, are they appointed by the president? Are they elected? How many of them are there? And these are things that you really need to think about. Who's going to be in control of your corporation? Because if you form this corporation and you hand it off to somebody else and they elect people to their board that don't really represent the values that you set the corporation up to kind of promote in your community, then you need to really calculate how the bylaws are going to keep you from going off the rails somewhere or the other. You know, just because a bunch of people get together and it's all warm and fuzzy at the beginning of an organization, you're going to have disputes, you're going to have people that don't see eye to eye on things, and you really need a way to resolve those differences in your bylaws so that you can say, this is how we elect our board of directors, or it's appointed by the president, or whatever. So the bylaws is something that's really important to do carefully. They're an explicit document. You have to do certain things, but you have a lot of choices on how you set up your company, and don't just blow through that and say, oh, check a box, it's done, because I've had situations in my corporation where I was really glad that I had done it a certain way, this way or that, because it just made things a little less complicated at times. Let me just say that.
And I have a quick question. In terms of the bylaws, are there ways that you are able to update and then submit updated bylaws under your incorporation?
Correct. And that's one of the things you set out in your bylaws. How do you amend your bylaws? So that's up to you. It's really all up to you. You just make sure that you have a way to amend them. And is it by a vote of the board? Is it by just the president saying, I want to amend the bylaws? So that's all in your bylaws, but absolutely, you need to be able to amend them.
All right, excellent. And then let's talk about how a 501c3 actually obtains, or a group obtains, the tax exempt status. Where do they start?
Yeah, this is when it gets fun. I was so excited when I got through with my articles of incorporation and my bylaws. I was like so excited. I got my beautiful piece of paper from the state government. I was at a corporation. It was so fantastic. And then I hit IRS Form 1023. It was like a chainsaw to the face. So IRS Form 1023 is what you fill out and file with the Internal Revenue Service of the United States of America to become a tax-exempt organization. So there are instructions in all the books you can get on how to form a nonprofit, but you also need to really read carefully the instructions at irs.gov for Form 1023. And it's a very frustrating procedure, as anybody that's ever filled out a tax form is. It's not easy, but there's a great benefit to having it. So a couple of things I ran up against that I wasn't really expecting, there's a filing fee. So, you can be prepared to pay $400 or $850, depending on your average annual gross receipts. And what's that mean? If you're expecting your nonprofit to bring in $10,000 or less, then you can file for $400. If you're expecting your nonprofit to bring in over $10,000, which most first teams and organizations would be, I would expect, it would be $850. They had this thing they were going to roll out where if you filed it online, you could do it for $200 and some dollars. It was supposed to go online like 5 years ago, and it never did when I was doing it. It may be there now, and I probably should have gone and checked to see that, but there may be something that you can do it for cheaper. But you can expect to pay some sort of filing fee. Now, there is one little thing that if you have no expectation of getting over $5,000, you're not required to file a Form 1023, and you're kind of automatically considered to be a tax-exempt organization. That's kind of a sticky widget, though, because if that's where you are and one year you get $6,000, then you're on the hook to pay taxes on that extra $1,000. So I wouldn't recommend that for anybody, and there's really not any reason to go through the trouble of forming a corporation for $5,000 or less. So that's just kind of a loophole that I wouldn't really recommend anybody take advantage of, because it's playing with fire. If your corporation actually is successful, that's not a good option for you. Let me go back to about the postmarking the application. You have 27 months from the date of when you file your articles of incorporation to get your Form 1023 in. Like I said, my entire process, getting the corporation incorporated, getting the tax exempt status back from the IRS was like 2.5 months. So, I mean, I filed my 1023. I had it ready to go as soon as my corporation was approved. Because if you don't get this postmarked within 27 months, you don't get to all the contributions that you get in the interim while you're waiting for your tax exempt status are tax exempt if you get approved, which is one reason I wanted to get mine in, because what happens if you wait 27 months and then you're not approved? Oh, wow, you got to pay taxes on all those donations, and all those people that gave you money expecting a tax deductible contribution, they don't have a tax deductible contribution. So it's a critical time period there once you get your corporation to get that tax exempt status nailed down as quickly as you can, so that your donors aren't in limbo, your company's not in limbo, and you're not on the hook for taxes. Because the whole point of this is to avoid those kind of issues anyway. So don't dawdle. So when you see this 1023, start working on that as soon as you start working on incorporating, so you've got it ready to file. That's just my recommendation. So it's not, so this 27 months, that's a bad idea. Don't do that. Get that done.
All right, great advice. It makes me a little bit nervous for filling out Form 1023, but with your advice,
oh, it's terrible.
With your advice about just going for it and filling in the information and really walking through the process, I'm sure it's not as nervous as it makes me feel. So let's talk about some of the advantages of becoming a 501c3, and what are some of the reasons teams would want to even consider going through the 1023 forms.
Okay, well, obviously the biggest thing is you can collect donations. The people that give you donations get to write off their donation as a tax deduction if they itemize their taxes on their Schedule A of their individual income tax return. Corporations can write off charitable deductions as well. Most corporations, private grant foundations will not even consider a grant application, or will not send money to somebody that is not a 501c3 tax exempt, federal tax exempt organization. You don't even bother writing grants if you don't have that 501c3 tax exempt status. So the other thing is, obviously, when you collect donations, you don't have to pay taxes on them. If I'm a mom running an FLL team, then I'm taking money from people from my FLL team, and that really is supposed to go on my income tax return as income. Now I can deduct what I spend on my FLL team maybe as a Schedule A charitable deduction, but not really, because there's nowhere to account for it. So if you're taking in any kind of money at all, you really need a 501c3. One of the reasons I formed Arkansas First was to be able to have that kind of umbrella coverage for teams in Arkansas that are not associated with a school, because if a team is associated with a school, they use the 501c3 status of the school usually. Sometimes they don't have such a great relationship with the school. The money goes off to the soccer team or wherever else, and they want to be able to control their own funds. So having their own 501c3 tax-exempt corporation gives them the ability to maintain their funding without losing it to the other school programs. But if I've got a homeschool group, if I've got a team just starting out, they may want to file a grant or get donations for their team. And so it's kind of a hassle for me bookkeeping wise, because I get all these dribbles and drabs of money, and then I have to, okay, I'll buy your tools with this, and I can't just send checks to people. I have to have receipts. I have to pay their registration. I have to pay for things that are consistent with the mission of Arkansas First. I just can't write personal checks to a bunch of people, because that's like money laundering, and I don't recommend that to anybody. So it's a lot of trouble for me, but it's a huge advantage to my team starting up that they can write grants And I pass a lot of money through Arkansas First that just strictly goes to pay registration fees for teams, or buy tools for teams, or pay for a hotel for teams. So it's a really good thing, if you've got 3 or 4 FRC teams get together and form one nonprofit, that's something that people might look into. It doesn't just have to be one team and one nonprofit. So that's more complicated. You have to be really careful with your bookkeeping, but it just gives you a lot more flexibility in fundraising and writing grants and that kind of thing. The other advantages are less important than those main things you always think about. Is you have protection from personal liability. The corporation is the one doing the business. You can buy a liability insurance, those kinds of things. Okay, the perpetual legal existence, separate and perpetual legal existence is pretty important. Say John and I decide we're going to move to the Maldives and not do First anymore. Well, Arkansas First will exist. It won't go away because John and I head for the hills. So it's really important, if the organization is important to your area and your state, that be set up separate from a person so that it can go on if a person is not available to keep whatever job they were doing with the team. Employee benefits probably doesn't apply to a lot of people that would be watching this, but if you have an event or a regional that's big enough that you want to hire a clerk or hire somebody to help, then you can hire them through your 501c3, and that your employees are eligible for fringe benefits and things that are generally not available to people just hiring people without an incorporated organization. So for that reason, it's kind of similar to a for-profit corporation. You get the benefits of being a corporation to hire people. And the last thing that's kind of not on here is, like I said before, your bylaws and your formal corporate documents really give you kind of a way forward and map out your mission of your organization, how things happen, how things run, and so it gives you a lot of structure. So it's not just people flailing around in a room trying to figure out what's the best thing to do. Well, we have these bylaws, guys, and here's what we agreed to do, and here's what the rules say. So it just makes it a little bit cleaner and less personality-driven when your organization is more defined.
And in the process of creating a 501c3, when do you most often see teams doing this research or become interested in looking into becoming a 501c3?
Usually when they start looking at grants, and every grant says, do you have a 501c3 tax exempt status? That's when they become really interested in it. And most of them see what it takes to become a 501c3 and they're just overwhelmed, which is understandable. But it's worth it if it's a big enough organization with people that are organized and available. I mean, the best thing to do, frankly, is to find some fantastically nice attorney or CPA who will file this and do it for you as a donation, or even a small fee. I can tell you, I don't think that I would do this for less than $5,000, but there are people that will. So, don't think I have to do this by myself and fill out all the papers.
Absolutely.
Exactly. I mean, if you've got an accountant or a lawyer in town, and it's not just filing the initial paperwork. There's ongoing bookkeeping and tax returns and things that have to be taken care of. So if you have a nice big law firm in your town, and the problem with that is every nickel and dime nonprofit out there has approached them for the same thing. So it's like everything else with First. When you recruit a sponsor, you have to make sure they understand that First is a unique and special program. That's not the same thing they see all the time.
Absolutely. Now let's look at the other side of the coin, and let's look at some of the difficulties associated with becoming a 501c3.
Yeah, I had, disadvantages, and I changed that because there really aren't any disadvantages to being a 501c3. It's a win-win all around, but it does produce more work. The main thing is, like I said, the red tape and the paperwork. I mean, getting through the initial process, I was so happy when I got that stupid thing in the mail. And then as soon as it got there, they kept sending me this little thing. Well, this needs to be fixed, and this little thing isn't just right. And by the way, don't be terrified of the IRS. All the stuff in the news and all the stuff they're persecuting these people trying to get nonprofits, that's a lot of hype. They're really nice people, and they will try to help you. So please don't be intimidated. If you get a letter from the IRS, it's not a threat. It's usually, here's what you did wrong and here's what you need to fix, and you can call them on the phone and they'll talk you through it. So it's not really my experience with them, and one of my jobs before when I worked in the tax office was to help clients mitigate IRS issues, and we never had any problem getting to a resolution that didn't make my clients want to run screaming. So don't be intimidated by what you hear on the news or your preconceived notions of the IRS. Generally a bunch of nice people who are pretty professional and just want to help you. So you get an email or a letter from the IRS, don't panic, just follow the instructions. Now, one thing I will warn you with the IRS, and this is a little bit scary, when you form a nonprofit, the government doesn't really like tax-exempt organizations because the government likes to collect taxes. So they really are pretty picky about making sure you file the proper tax returns every year and that they are done properly. And that's the Form 990 that you have to file every year. And you also have to file a state tax return. The state tax return usually is like one page, 3 or 4 little things. It's really nothing to it. It's just kind of a reporting form. It's no numbers or anything. But the Form 990 that the IRS wants you to file is not a simple form. It's not as difficult as the 1023 once you get that done. But it's tedious. You have to list all your donors, make sure that you have all their information when you get a donation, and make sure they know that, if it's like an over $5,000 donation, it's going to show up in your tax return, and they better have it written down right in their tax return, so that the IRS tries to match those things. So they see I gave somebody $5,000, they want to see it show up on a tax return somewhere as either income or as a proper donation to a tax exempt organization. So those big dollars, they will track back and forth. So you have to be very careful and protect your donors as well to make sure you list their contribution, because if somebody says, I donated $5,000 to Arkansas First and I'm going to write it off on my income tax return, and then it doesn't show up on my tax return that they gave it to me, then that makes their donation suspect. So you have to be very careful to protect your donor so that they don't get a letter from the IRS, whoa, you want to deduct this, but we don't show it coming in anywhere else. So there's, I'm not trying to scare anybody off, but you need to be very serious about your reporting requirements when you have a 501c3, or you won't have any donors, because they get one letter like that, they won't be donating any more money to you. I can promise you that. So you have your, like I said, you have an accountable organization. It exists. It has certain requirements that have to be met. It's kind of like having a child. It's here now, and you got to deal with it. You can't just say, oh, I wish I hadn't done that, and put it in the closet. You have a 501c3, and you have to take care of it. You have to have a board of directors, hold regular meetings, have minutes from your meetings. Your meetings can be on the internet, they can be on the phone. You define when your meetings are and how your meetings are and all that, but you're required to have a board that does hold meetings, and you're supposed to have documentation of their activity. You have restrictions on paying directors and officers. Nobody that works at a first nonprofit really at the level we're talking about gets paid, so that's kind of a non-thing. You can't use your organization to go out there and drum up political things, which everybody knows. Upon dissolution, when a corporation dissolves, there are different ways that assets are distributed and all that. Since your assets, if you have any, were bought with somebody else's money, basically, there's a lot of restrictions on, if you have a truck and a trailer in your nonprofit for your robot team and you dissolve your corporation, well, you can't just necessarily park that truck and trailer in your driveway and call it yours. So there are a lot more strict rules, and I don't know what they all are. I'm not going to go into that, but you have to be very careful. Most nonprofits won't own property because of that. They don't want to have property, cars, trucks, equipment, buildings, because of these dissolution issues. Let's see what else. Okay, somebody else is in control of your organization if you're tax exempt. The Attorney General of your state has very strict oversight. They can ask you for things. They can demand things. They can. They just have a lot of ability to make you be transparent. So be prepared to be transparent. You're not just your private little team anymore. You are an official entity with certain rights, rules, restrictions, and all that. Just try to avoid any kind of interaction with those people. But if you are subject to their oversight. And I did have another note about the board of directors. You need to be very careful about selecting your board of directors. Like I said earlier, just because you all get along now, anybody that's been on a first team knows that it's a difficult thing. It's intense. It is people who are attracted to FIRST have strong personalities. So you need to make sure that your board is comprised of people and that your bylaws are written in such a way that you minimize conflicts, if that makes any sense at all.
Absolutely. So it sounds like you're doing some important documentation up front when the team is collecting and gathering some of these resources and donations from sponsors would be incredibly helpful when having to submit some of these additional forms later on.
Correct. You need to just keep very good records. You need accounting software. I use QuickBooks. You need, because I got it on TechSoup. That's another thing, man, I did not put in here as an advantage. You can be a member of a group like TechSoup, which is techsoup.com. We should add that to the last slide. That's a place where nonprofit organizations can register, and then you get discounted software, computers. I got a Grant Station membership for like $100 a year. It's usually several $100s. So there are a lot of benefits out there in the marketplace. You can get discounted hotels, all kinds of things if you have a tax exempt 501c3 and register in the right places. And TechSoup's one of the very best ones. I can get like, Microsoft Office 2010 for like $30. So that's another advantage I should have put in there. I'm sorry.
Hey, no problem. And teams, just so you're aware, we are going to be putting some more detailed documentation PowerPoints up for you to print off the US First website for you to reference some of this information as well. And so we'll be sure to include that as one of the resources we go over. But transitioning over, let's talk about some of the resources we did include in the webinar. Would you want to go over a few of these and kind of talk about what they do for nonprofits?
Sure. The first one, nolo.com, the book that I have, which is I've lived with it for a couple of months. It's really was a great resource and very clear and simple to read. And all the forms came on a CD-ROM that came with the book, and it wasn't very expensive. Actually, I got it for free. That's another story. But I think you can get it for like $35 at nolo.com. But it's called How to Form a Nonprofit Corporation. And I had the 10th edition. The 11th one is the current one that's available now. But a lot of the material from the slides and the things that you've got notes this is the book I used, this and the IRS instructions to do everything. I never had to look anywhere else. This book was so good. LegalZoom.com, I'm not going to promote a business, but I use LegalZoom.com to do my corporation, and they just did an unbelievably professional job for like $90. And that was to get my articles of incorporation. I just used their templates and bylaws and all that. And they actually, for my $90 or whatever it costs to get my filings done, they actually sent me this book that is like $35 at Nolo. So that was part of my LegalZoom package, was my corporation filing and this book. Now I had to do my own state filing. The LegalZoom one was just the federal, but it's just kind of, like I said, the state level tax exempt stuff is pretty easy after you get the federal stuff done. Now, when I say LegalZoom for the incorporation, that's to get the corporation 501c3 at your state. That's not to do the 1023 for the IRS. That's where you go to irs.gov and deal directly with them. The LegalZoom or any of the other legal websites do articles of incorporation, not tax exempt status. That's the second step we were talking about. And irs.gov, it's really not a terrible website. It's a lot better than it used to be. But if you just go on there and search Form 1023 instructions, you'll get a nice PDF. You'll get a form. You can get a Form 1023. There should be a fill-in form for that. Most of their forms are fill-in PDFs now. Make sure and save them to your hard drive, though, and be real careful with that, because I've spent hours working on fill-in forms on websites and then have them just kind of go away. So that's just because it's a big, complicated form. Make sure you save it periodically so that you don't lose your information. The statelocalgov.net is the one I talked about earlier, where you can go and find your individual states links. Basically, it's just a group of links to your state Secretary of State website. And then TechSoup. We need to put TechSoup on there because that's a great website.
Absolutely. We will certainly do that.
So to celebrate getting your tax exempt status by going and buying lots of cheap software on TechSoup.
Do you have any final overall pieces of advice you want to give teams who are going to start the process of going through their 501c3?
Well, like I said before, it's a difficult process. It's very tedious. It's not nearly as difficult and tedious as building an FRC robot in 6 weeks based on the rules for the year. It's nothing like that. So anybody that can build an FRC robot and pass inspection can do this. You just have to be careful and not expect too much of yourself and kind of pace yourself, because it's a tedious, frustrating process, but it's possible for anybody. I have no special training. Like I said, I didn't take a single class in college on how to form a nonprofit. I just opened up a book and started reading. So if you have a desire to do it and the ability to read instructions, you're kind of done. And then you need some like stubborn ability to get through a project, but that's kind of what FIRST is about anyway. So FIRST people should be set up pretty well to get their own nonprofit status resolved. And also, I was telling you earlier, all the answers to any question I would have, anybody would ask me a question, would be get a book and look it up, because that's whatever I did. Whenever I would get to a question in the form, I would just find that line number in the book and look it up. So you don't really have to know anything, you just have to know where to look.
All right, and as a reminder, the webinar here is for informational purposes only and should not be construed as legal or tax advice. But teams, if you do have any questions, feel free to contact me at rbecker@usfirst.org. And Meredith, thank you so much for coming on board and doing this webinar with us today for the Fundraising Toolkit. I really appreciate your time.
Well, Renee, I really appreciate the Fundraising Toolkit. It makes my teams very happy. So thank you for all your hard work, and I hope somebody was helped, at least inspired a little bit, to not be terrified of this. So thanks so much.
Thank you.